Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll cover some of the major events of the past week and discuss how they impact the global currency markets. The US dollar declined after a report indicated that the US added the fewest jobs in a year last month, increasing speculation that the Fed will introduce further stimulus measures. A third round of asset purchases or quantitative easing could become necessary if US economic expansion declines. The Federal Chairman, Ben Bernanke, has pledged to keep the interest rate at a record low of 0 to 0.25% until 2014. A report indicated that the GDP rose at a 1.9% annual pace in the first quarter, which is down from a previous estimate of 2.2%. The number of Americans applying for unemployment insurance grew last week to a high of 1 month. The yen increased against the US dollar on heightening speculation that the Bank of Japan would intervene to curb the advance of the currency. The Japanese finance minister has undertaken to take decisive action on currencies after the yen rose to its highest level since February against the US dollar. The yen often strengthens in periods of political and economic turmoil because the nation has a trade surplus. The US dollar was last trading at the level of 78 against the Japanese yen, which is a decrease of minus 0.38%. The euro declined to a low of almost 3 years against the US dollar as Spanish officials attempt to fund a bailout of Bankia Group, which is the country's third largest lender. Spanish 10-year bond yields increased to 6.7% on May 30th, a level last reached in November. The European Central Bank will publish its latest economic forecast when it meets on June the 6th this year. The euro was last trading at the level of 124.30 against the US dollar, which is an increase of plus 0.53%. In commodities, oil declined to the lowest level in almost 8 months as employment reports in the US and the euro area signaled that demand for fuel may decline further. The European sovereign debt crisis that started in Greece and then moved to Ireland, Portugal, Italy and Spain has curbed economic growth and fuel consumption. Manufacturing is decreasing worldwide as China led a slowdown in manufacturing across Asia, and a gauge of manufacturing in the Eurozone declined to a 3-year low. In the USA, manufacturing decreased in May after reaching a 10-month high in April. Oil was last trading at the level of 82.23 a barrel, which is a decrease of minus 3.81%. The gold price rose the most in September on increased speculation that the Federal Reserve will take steps to stimulate economic growth. Gold was last trading at the level of $1,624.28 an ounce, an increase of 4.11%. Well, that's all we have time for today. I hope you've enjoyed this week's review and you'll join us next week. Until then, be sure to visit us at ufxmarkets.com for all of your online trading needs. For UFX Markets, I'm Martin Smith. Good luck and happy trading.